Big income year, stock sale, bonus, business distribution. A donor advised fund can make those years far more tax efficient without forcing you to rush charitable decisions you might not be ready to make. The question often comes up, David, should I use a donor advised fund? I've read about it before. How does it work? It's a great question. And honestly, it's one of the most common planning conversations we're starting to have. Why? Because donor advised funds, or DAFs, have become one of the simplest and most flexible ways to manage charitable giving, tax planning, and long-term legacy goals. Let's walk through why we use iGift, how it works, and how it fits into a coordinated wealth strategy. Choosing the right DAF matters. There are plenty of platforms out there. Fidelity Charitable, Schwab Charitable, Community Foundations, and many others. Nothing wrong with them. But here's why we use iGift within the Puzzle Wealth Solutions walls. It integrates directly with our planning process. It allows us to manage the portfolio inside the donor advised fund. And it gives clients a much simpler, more personal experience than most national platforms. And that's really what clients want. Clarity, control, and guidance, not another account to manage alone. If you're not familiar with how a donor advised fund works, here's the quick overview. You contribute assets, such as cash or appreciated investments, into the DAF. You receive a charitable deduction in the year that you contribute. And then you recommend grants to charities over time, whenever it fits into your goals. One thing people often ask, am I giving up control? And the answer is not really. A DAF contribution is irrevocable because it's a charitable gift, but you remain the ability to recommend where the funds ultimately go. That's the value. You get the tax benefit today while keeping flexibility around the timing of the charitable gifts in the future. So why do our clients prefer iGift over the big custodial platforms? First, we can manage the investments inside the DAF for them. Most national firms limit investment options, so they require higher minimums for custom portfolios. With iGift, everything stays aligned with your risk tolerance and your long-term plan. Second, the interface is it's pretty simple. Clients can see contributions, balances, grants, investment progress all in one place without navigating a complicated portal. Third, it's built for more sophisticated planning. Large gifts, appreciated stock transfers, multi-year giving strategies, family involvement. iGift supports all of that. It matches the level of planning our clients expect. A big question that clients ask, well, why don't I just donate directly to a charity each year? Why use a DAF at all? Because a donor advised fund separates the tax timing from the giving timing. Imagine you're having a high income year, like a business sale, that large bonus, RSUs vesting, a concentrated stock sale, or a substantial Roth conversion. You may want the deduction in that year, but you may not be ready or you may not know which charities you want to support quite yet. A donor advised fund lets you take the deduction now, and then you can give thoughtfully over time. It's about getting the tax benefit when it matters without rushing that charitable decision. The next question is usually, do I have to give money to charities every year once the DAF is funded? No, not at all. You give when you want. Once a year, once every few years, or after the fund grows. There's no annual requirement. That flexibility is a major reason people love donor advised funds. Another powerful strategy is front loading. This is where you combine several years worth of giving into one tax year. You contribute a larger amount to the DAF so you can take the itemized deduction for that year. And then in future years, since your giving comes out of the donor advised fund instead of your checkbook, you can use the standard deduction again for taxes if you don't donate a lot each year. It's a clean, tax-efficient rhythm that works extremely well for families with variable income. Next, what can you use to fund the donor advised fund? You can donate cash, publicly traded stock, ETFs, mutual funds, and in some cases, certain privately held assets depending on approval from the platform. Here's the tax efficient part. Donating appreciated items often avoids capital gains taxes while still providing the full charitable deduction based on fair market value. That combination is one of the most effective charitable strategies available. And once your donor advised fund is set up, the natural question becomes, how do I actually send money to the charities? The process is straightforward. Inside the iGift portal, you simply recommend a grant, choose the organization, the amount, and the purpose, and the administrator handles the rest. And here's something cool. Many clients involve their children or grandchildren in these decisions. So it turns that fund into a family discussion about values and impact, rather than just some tax tool. So where does a donor advised fund fit in the bigger picture? A DAF improves tax efficiency. It simplifies giving. It coordinates with your financial plan. It aligns with your portfolio strategy, and it reduces administrative work. When we manage the investment strategy inside the donor advised fund, it stays integrated with your overall planning and asset allocation, your risk, time horizon, estate considerations, charitable goals. It becomes a true extension of your wealth plan. If you've been thinking about charitable giving, or you want a more structured and tax efficient way to support organizations that you care about, iGift is a powerful tool to consider. And if you want to explore whether a donor advised fund makes sense for your situation, please use the link in the description of the video to schedule time with our team. We'll walk you through the numbers, the planning implications, and the long-term impact. As always, I appreciate you watching our videos. I really do. And remember, stay intentional, stay proactive, and keep aligning your wealth with the impact you want to make.